The central bank governor says Nigeria's economic growth slowed in the third quarter of 2025, with GDP expanding by 3.98%, a 0.25 percentage points lower than 4.23% recorded in the previous quarter, despite outperforming the same period in 2024. The governor of the Apex Bank, Mr. Olayemi Cardoso, said the country's gross domestic product declined by 0.25%. That's compared to the entire second quarter of a year earlier. Now, Mr. Cardoso explained that although Nigeria's GDP expanded by 3.98% in Q3, a growth higher than 3.86% recorded in the same quarter of 2024, but he noted that the figure fell below the 4.23% that was the growth recorded in Q2 of 2025. He disclosed this during the second half 2025 statutory briefing before the Senate Committee on Banking, Insurance and Other Financial Institutions, chaired by Lagos East Senator Adetokunbo Abiru. Well, let's end the week with conversations around the fundamentals surrounding this third quarter GDP that has generated, of course, reactions from all and sundry. And my guest is Mr. Kenneth Erikume. He's a partner, tax reporting and strategy with PricewaterhouseCoopers. Mr. Erikume, thank you so much for being on the show. It's good to have you this afternoon.
Thank you for inviting me.
Yes. In my introduction, I stated clearly that it was a bit of decline if you're to look at what happened in the Q2 to what we saw in Q3. But if you also look at the Q3 figures to what we had in Q3 of 2024, it was also a positive. But in your understanding, take us through what you make of the Q3 figures as released by the NBS.
Yeah, thanks, Tolu. I always believe that comparing quarter by quarter doesn't really give you the reality, right? Because there are certain trends that occur throughout the year that happens in specific quarters. So when you're comparing economic data and you're looking at quarter by quarter comparison, those could be impacted by several factors, including things like festive periods. It could include things like disruptions that usually occur at particular times of the year. So my view is that comparing with prior year gives a better perspective of how things have evolved over time. And like you mentioned, it's positive, and that's the expectation that we have felt, over the last couple of years, that at some point we'll begin to see some stabilization in the economy. As inflation begins to ease, then you begin to see some real GDP growth, which would continue to grow over time and into 2026. My expectation is that, as inflation eases and interest rates begins to fall, we'll then begin to see some domestic demand-led recovery, where some pent-up demand, which had prior to now being kept under the lid, will begin to find expression in terms of economic activity. We should also begin to see some slight increase, as we've seen over the months, of an uplift in the crude oil output as well. And when you look at all of these things, it's not unexpected that you then begin to see more increase in our GDP rate. So the expectation of the projection of 4.1 in 2025, I think it's a good one, and one that the government still needs to continue to target. However, we need more than that. As I always say, Tolu, the reality is that the GDP per capita would not grow if our GDP growth rate falls behind our fertility rate, because it then means that the economy is not expanding quickly enough to meet up with, with the development and the growth in the citizen numbers. So I think while the growth is welcome, we still need some more, intervention from an economic perspective to drive our GDP such that we begin to see the gains filter through to citizens. And the other thing I would like to highlight, which is also quite positive as well, is the growth of the agricultural sector, because that's one of the big drivers of the GDP growth rate, and several factors contribute to that positive. So one of them is obviously more favorable weather. That has helped. There's also the government efforts to improve fertilizer distribution and usage, and that continues to add benefits across the food and agricultural value chain. Now, on the flip side, in terms of what we need to really address, is that we've also seen, some exacerbation of, security, which could actually impact on the ability of, the farmers to go into the rural areas and to get the products out, as well as the logistics infrastructure to get them from one state to another. I think that would be a huge challenge to ensure that we continue to maintain the momentum from an agricultural perspective. The other important factor, which or sectors that I believe are important, is also our retail, trade, and financial services. And you will see that the performance in that space will continue to improve because consumer sentiment is actually improving, after the past couple of years with the spike in inflation and prices that put a lot of pressure on individuals and households. There's now somewhat an improvement in consumer sentiment. And, while, this has not exactly eased, we've seen some positive reaction from a monetary policy perspective, with holding the rate and dropping, marginally the interest rates, that the credit conditions, is slowly starting to stabilize, and that may give investors and entrepreneurs a bit more confidence around where the interest rates are going. So for me, those are important factors, that has contributed to this. And if, efforts are put into place to continue to drive this, we'll continue to see growth even into end of 2025 and even into 2026. Do not forget that, we're now in the month of December, where there'll be a lot of activity in the hospitality, the food and beverage sector, the tourism sector. So I'm quite optimistic that, some of those targets that we set initially at the beginning of the year, even if we do not hit it, we'll be very close to it. And then even into 2026, we'll see an upward trajectory. But like I said, it's still lower than what is expected from a country like Nigeria, to ensure that the GDP per capita, which gives a true reflection of how the improvements is filtering down to citizens, improves.
Interesting stuff. Thanks so much for that breakdown. Two things for me. Services sector used to be the driver of our GDP to at a particular time, if I'm correct. and this may be the last time we saw services doing so very well. But now there's a bit of decline from that space. But Mike, two in one, I'd like you to react to that. Also, the level of diversification of our economy. How well diversified would you say Nigeria's economy is at the moment? You know, we talk about this diversification thing, but talking about revenue now, the way revenue is coming and the way growth is coming, do you think it's well diversified? That's two. The third one, you talked about interventions. What sort of interventions specifically should we now be looking at, particularly that would impact the macros?
Yeah, thank you very much for those questions. You're 100% correct that services was historically very important, and it continues to be important from our context. And one of the reasons why we haven't seen the expansion of services in the current data is simply the fact that how household consumption has been quite muted, considering the pressure from inflation, as well as the lack of a stable exchange rate. Now, and of course, the monetary policy, the tight liquidity policies that we've seen over the past couple of years. Now, what you would see is that, you know, prices will continue to ease, and that would unlock pent-up demand for services, you know, into the future. So while it didn't show exactly significant growth in that space, my expectation is that things will improve as you know, pent-up demand is unlocked, you know, in the last quarter of this year and even into 2026. So it's not something that we should be worried about, in my view. I think that, you know, it's just a function of what has happened within the quarter. My expectation is that things will continue to improve. Do not forget that there is also fiscal policy that would, you know, contribute to the growth in that sector in 2026. And many people do not really understand this, but it's something that the government has come out to speak about around the area of the value-added tax that now allows people that play in the services sector to be able to claim the VAT on their costs effectively from 1st of January 2026. Now, what that would do is that it would give the players in that space the flexibility in terms of their margins. Their margins would improve, and therefore they can play better with prices, you know, discounts and rebates and all sorts of incentives that they can give to their customers. Because, you know, if you keep things stable, you know, in terms of, you know, factors, and keep them stable 2025 into 2026, automatically there'll be improvements in their margins just because of the ability to claim input VAT. So that is also expected to boost the services sector and drive growth in that space as well. The issue of diversifying the economy, I think, you know, the biggest contributor to our GDP is agriculture, right? And that tells you already that our economy is diversified. So contribution from agriculture, services, retail, and one of the bits that I also want to talk about is the improvement in construction activity that should occur with some of the capital projects that are currently occurring. So we have the Lagos-Calabar Coastal Highway, we have the railway, we have the Eastern Rail Corridor from Port Harcourt to Maiduguri, We have the ongoing capital expenditure at the Dangote refinery, and the recent comment saying that they would add some additional capacity to that. So you see there that, apart from government, there are private sector investments in that space, which would then drive, construction activity, as well as the corollary, which is real estate, across that, where those constructions are happening. So the economy is diverse enough. I think, two things. The first one is there's a lot of informal players within the economic space, and we need to afford them protection, and allow them to express themselves, and find their foot, and get well established. And one of the ways to do that is to incentivize them, to support them, and make it easy to do business. Again, fiscal policy comes into, or would I call it tax policy, comes into play here as well, with some of the reforms that are happening at the subnational space, where they are harmonizing the various taxes. And that project is already ongoing, championed by the Ministry of Finance, the Joint Tax Board. And if it finds expression, there'll be a lot of benefits in that space as well. And the other bit I wanted to mention is what is not diversified enough or sufficiently is our crude revenue. And that is, still exposed to shocks. And if there's movement in the price of crude in the international market, then the impact really cascades down into the Nigerian economy. So it's just to ensure that we're able to, from an export perspective, diversify our export earnings, because it's still very much skewed towards, oil and gas, and then also diversify our revenue sources, because it's still, again, quite skewed towards oil and gas. And if we're able to do that, I think then the issue of diversification should be pretty much under control. Now, I think your final question was around
interventions.
Interventions. And I think I already highlighted a few of them.
Yeah.
One of them is around the so-called informal sector, but I wouldn't call them the informal sector, because really we shouldn't be having that, where we say we don't know these people, they are so informal, we can't organize them. That should be a thing of the past, where we organize them and we know the players. We should rather call them micro, small, and medium enterprises, and ensuring that we streamline processes, and government gives them support in order for them to thrive, because a lot of our employment sits within that space. The other bit is security. Security remains a critical headwind for us in Nigeria. We've seen elevated insecurity, including notable spikes in kidnappings, and it's been very public recently, because of the comments from a geopolitical perspective from outside the country, including the United States. Security threatens agricultural output. It threatens oil production with crude theft and vandalism. It also impacts on investor confidence, and also diverts fiscal resources from other places where it should be focused on, like education, healthcare, and so on, into security. So I think an intervention from a security perspective, an emergency from a security perspective, and we've seen the government react already with some changes in organization and leadership in that space. I think we need to intervene and ensure that we make it possible for businesses to thrive in a secure environment. The other intervention, which I believe we also need to pay attention to, is the operational risks from local refining capacity. The Dangote refinery and any other refinery that comes on stream, because that could also disrupt the baseline outlook from a Nigerian perspective. Delays or outages would keep us dependent on fuel imports, and also put pressure on our foreign exchange, and invariably elevate inflation, as we've seen it, for a few years now. So government needs to look at that. The NNPC and all the players need to look at that and look at interventions. And I don't want to give recommendations, clear recommendations, but obviously we need to look at the domestic supply of crude to these refineries. We need to look at issues around security for these players, and we need to ensure that there is energy security for us as a country. And I think what government is doing in the agricultural space needs to continue by ensuring that we pay particular focus on getting fertilizers down to the farmers. And then the final thing, which I would love to touch on, is actually around the possible easing of the interest rates into the future, because that would ensure that entrepreneurs and risk takers are able to do more in terms of investment. Because at the moment, it's really very tough for people to to invest and take risk, right, by taking loans and investing in capital expenditure. And if the interest rates comes down at some point, and I know this is a big challenge, it's not something you just say it comes down. You have to look at the dynamics of how that impacts on inflation. But if inflation is stabilized, as we anticipate with all the stability we've seen, then some monetary policy easing would help to ensure that people are able to mobilize the required capital into the real sector, because the manufacturing industry has really suffered over the past couple of years.
It's a good way to live it, I must tell you. It's been an interesting conversation, as always, with you, Mr. Kenneth Erikume, there live for us, discussing issues around GDP figures. He is a partner, tax reporting and strategy, PricewaterhouseCoopers. Thank you so much, and do have a great weekend.
Thank you, Tolu. Enjoy your weekend as well.
Cheers.